Well, good morning, good afternoon, or good evening, depending on when you may be viewing this video. Matt here, the Fish and Finance guy, proudly representing Leader One Financial. Wanted to follow up with a video that I posted a few videos ago, um, and I had a couple of more thoughts after I got done recording that video, which was in regard to the basics of refinancing, why someone may consider refinancing an existing mortgage, and then just talking about like the when and again the why. So there were a few other thoughts that I wanted to just pass along as just general information here. This is not to be construed as financial advice in the context of this video. Any decision that you may make regarding a refinance transaction or a restructuring of the indebtedness for the mortgage against your home, um, you really want to do that in partnership and meaningful conversation with a licensed mortgage professional. But some of the other reasons that someone may reach out and inquire as to whether or not right now might be the right time to consider doing something in the way of a refinance is if you currently have an FHA loan on your property, and as long as some other variables come into play, and I don't want to go through the checklist and the guidelines of those, but the equity position would need to be strong enough, and your credit score would need to be realistically at a level that allows all the numbers to truly benefit you. But if you currently have an FHA loan on your property, the only way, if you obtained that loan, and I believe the trigger date was June 2nd of 2015. Um, don't hold me to that specifically, but I think it was the beginning of June 2015, where with an FHA loan, the component within your monthly payment that is known as the monthly mortgage insurance that gets paid to FHA, if your loan was acquired after that, I believe June 2nd of 2015, the only way to eliminate or get rid of that monthly mortgage insurance component is to refinance out of that FHA loan into a standard or conforming or more traditional type of a mortgage. Again, on the assumption that the equity position is great enough to allow you to not need private mortgage insurance on the new loan you would be obtaining, but there is no way to eliminate that monthly component from an FHA loan without actually doing a refinance and paying that loan in full and taking out a new loan. Now, if you have a conventional loan, which is commonly referred to as the Fannie Mae or the Freddie Mac mortgage, um, you may or may not need to go through a refinance to eliminate that private mortgage insurance component within your payment every month. Again, a number of factors come into play as to how and why you may need to proceed in order to, let's say, get that monthly PMI removed. So, in some cases, it could be a required step to do a refinance to get rid of that. In some cases, if you've been paying your mortgage as agreed for a set amount of time and your equity position is great enough, you may be able to inquire with your current lender about just getting that PMI removed. Again, some variables and things need to be satisfied and in good shape for that to happen. Um, One of the other things to keep in mind, and this is where again I'm always going to just defer back to, whether this is possibly me or someone else that you know and trust, it is critically important to develop a bit of a relationship with whomever your preferred mortgage lending individual may be, and have open and meaningful conversations and dialogue with them about things that you may be considering, or if there's a scenario that you're analyzing. Um, I know oftentimes I will get a call from somebody and they're like, well, hey, I want to, look at maybe refinancing because I'd like to get rid of this mortgage insurance in my monthly payment. I've been in the home a couple of years. I don't feel like I should have to pay this anymore. And, surface level, that may all be 100% correct and make a lot of sense. But what you have to take into consideration, and this is where looking at the numbers really matters, because we can talk here surface level and with, well, should be's and kind of this much or maybe a little bit, or like just generic things. But when it comes to the details of a mortgage and your monthly payment, this is all dollars and decimal points. There's no subjectivity here. There's really no emotion involved in the analytics of looking at numbers. This is very simply looking at, okay, where are you? What is the breakdown of your monthly payment? Here's what we could do if you were to look at refinancing. Here's what the new numbers would be, and you do a comparison. Sometimes you need to look at that in a short term capacity, sometimes more in a longer term capacity to determine whether or not something does or does not make financial sense. And I kind of labor on that point here for just a moment because I have had scenarios where someone wants to get rid of that mortgage insurance. They just don't like seeing in their payment. It's a waste of money. Well, I understand that. And in many instances, something, can be done to take care of getting that eliminated. But let's just say, as a generic example, let's say somebody is sitting with a 4.5% mortgage that has mortgage insurance within the monthly payment, but we are currently sitting in, let's say, a 6.5% interest rate environment. Well, if a refinance is necessary to eliminate that mortgage insurance by either changing the loan program or let's just say you can't get it removed at this point in time on the existing loan, so a refinance is the only way to get rid of it. We have to look at what the long term outcome and the immediate short term outcome is going to be. Is refinancing out of a 4.5% loan into, again, let's just say 6.5% to get rid of that one component? Is it worth it? You may end up seeing that even though you're doing a refinance and you're getting rid of the mortgage insurance, you could end up with a higher monthly payment because you're in a higher interest rate environment. So all these variables need to be looked at and discussed to figure out what might make the most sense for a given individual at a moment in time when they're pursuing a refinance for whatever reason that may be. Another element um, that has come up in conversation just a few times over the years, but if you are in an FHA loan, if you are in a VA based loan, if you are in a USDA loan, or if you are in a standard conventional loan that currently has an escrow account with it. So, very simply, the escrow account being that supplemental little side account that's associated with the mortgage, but it's the place that the money goes every month when you make your monthly payment that gets allocated toward paying your taxes and your insurance and your flood insurance if applicable. So, on an FHA loan, a VA loan, or a USDA loan, you do not have the ability to not have an escrow account. It is a requirement that comes along with those loan programs. Now, depending on what the details were and possibly what your choice or decision was at the time that you acquired a standard conventional loan, you may or may not have an escrow account associated with it. But if you do on a conventional loan, or you are in any of those other three loan types and you currently have an escrow account, truly the only way to get rid of that is to refinance into a conventional loan, as long as your equity position is strong enough, being at least 20% equity in the property when it's all said and done, and then choosing to not establish an escrow account for your taxes and insurance at the time that you close on the new loan. Some people enjoy having the escrow account and just not ever having to worry about paying the taxes and the insurance on their own. They just like it being all wrapped into the payment. But it is one component within the monthly payment that can change every year based on any movement or variation in your property tax and insurance bills. So there are many instances where I've had conversations with people that they had the escrow account when they first bought their home, or the loan program they were in required it. But as they get a little further along in life, a couple years into owning the home, maybe a little more established in terms of just having money set aside in a savings account and other investments, many people often find the escrow account tied to a mortgage payment to be the biggest nuisance with their mortgage payments. So if you are considering getting rid of the escrow so that you basically just know this is my mortgage payment every month and every year, I'm going to take care of my supplemental items like taxes and insurance, then again, the only way to get yourself into that position is to do a refinance into a standard Fannie Mae or Freddie Mac loan. And not that there may be other options available in like some of the non-conforming or alternate loan programs out there, but just surface level here, generally speaking, you can't go into an FHA loan, you can't go back into a VA loan or a USDA loan and eliminate the escrow account. So if that's something you're considering doing, just be aware that typically your standard conventional loans and then some of the alternate ones that exist in the market today are the only products where you can choose to set up the loan from the very beginning to not have mandatory escrows as part of the transaction. And then the final thing that I was just thinking about here as to why someone may consider refinancing or maybe need to refinance is if you purchase the property with someone that now wants to be removed from the title and the responsibility of ownership for that particular home. So, whether this was a parent or a family member that co borrowed with you to help you qualify when you acquired the property, it could be a case of you and a friend or a business partner went in jointly on a property acquisition, and let's say now one of the partners wants to move on and do their own thing and get removed from the title and the financial responsibility of the existing mortgage on a property. Well, you can't just remove someone from the financial obligation inside of it, in terms of if they signed on that paperwork when the property was acquired and they were on the mortgage and the note and the deed, they cannot be absolved or removed from responsibility on that note and mortgage unless a refinance is done, and it is done solely and exclusively in the name of the remaining owner, or it could be the remaining owner plus someone else. So let's say one family member wants to get out of owning a rental property with you, and another family member wants to step in and take over their position. That could very well happen, but again, kind of the last thought or reason here that I was able to come up with that somebody might need to consider refinancing is to remove a party that is on the current paperwork and ownership of the home, to get them removed entirely for whatever reason that may be. So with that being said, thank you for watching. Matt here once again, the Fish and Finance Guy, NMLS ID 296861. If you have any questions, or you are chatting with any friends or family that maybe have a question about refinancing or what's going on in the market, or what would numbers look like right now if I were to talk about a couple of reasons that I might want to consider refinancing, don't ever hesitate to reach out. Be more than happy to help with myself and the team that I am a part of. If your property is located in Michigan, Ohio, Indiana, Illinois, Tennessee, Georgia, or here in Florida, where I am personally, I'd be more than happy to have a conversation with you and see what we could do to help you out. Thanks for watching. We'll see you again in future videos. If this is your first time here, thanks for stopping by. If you've been here before, thank you for coming back. I appreciate you being here. Feel free to drop comments down below if there are any topics that you would like to see covered in future videos, and I will look forward to seeing you in the next one that comes out. Take care and make it a great day until then. Well, hey there, if you are still with me, I truly hope that whatever the reason may have been that you just watched this video gave you some needed information, or you found even just an ounce of value within it. If you are looking to relocate within the state of Florida, if you are looking to move here from elsewhere in the country, please do not hesitate to reach out to me, whether or not, as I have mentioned in my videos pretty regularly, I am a mortgage lender, but whether or not you may need mortgage financing, I would be more than happy to introduce you to anyone in my circles and my professional sphere of influence if there is anything that you may need here, especially in Southwest Florida or possibly elsewhere within the state of Florida. I have contacts throughout the state. I can't say that I know someone in every city and every town, but I am sure if there is something that you need, I may be able to reach out and find a reliable resource for you. If you have any questions about mortgage financing, that is what we are here to help you with. So, whether that is understanding the differences between an FHA loan and a conventional loan, if you're a first time home buyer, or if you're an investor and you're trying to understand the nuances of a DSCR loan versus a standard qualifying loan for a rental property, I am more than happy to answer any questions and help and guide you in any way that I can. Whether or not you are thinking about doing something in 2 weeks, 2 months, or 2 years, don't hesitate to reach out. I'm here to help you in any way that I can and to be a resource for you. Thank you very much for tuning in. I appreciate you watching my video. And if you would like to see future content, please go ahead, subscribe, hit the little notification bell. And if there is anyone else you know that you feel might benefit from the information in this video, please feel free to share it with them. I am here to be a resource for you. I'll look forward to seeing you in future videos. And if there is ever anything that we may be able to assist you with, I look forward to hearing from you. Reach out via phone, text, email, Calendly link. If you want to do a Zoom call or a phone call, whatever works best for you, happy to accommodate. Take care. Make it a great day. Thanks again. And purely for compliance purposes, this is Matt Pfeiffer, NMLS ID 296861. I am the Fish and Finance Guy. Thanks again. We'll see you in future videos.